Look, it doesn't seem to be the case broadly. There's probably some projects that are seeing increased levels of interest. Talking to developers, there are some that are actively marketing over in China. But what we can see on search on realestate.com.au is that Chinese searches are down 67% over the past 12 months. They're not gone entirely, but they're certainly far less active than they were 12 months ago.
There's also a lot heavier restrictions in place now, aren't there, than they say was a few years ago?
Yeah, there are a lot of restrictions. I mean, I guess the main one is that offshore buyers are restricted to only buying new, so that's a really big one. We are starting to see, we are hearing of growing levels of expat interest in Australian property. At this stage, it does seem to be hitting premium markets such as Mosman and South Yarra. But there are some restrictions now being put in place with regards to capital gains tax and expat owners. So at the end of June, they will no longer be capital gains tax exempt as they were previously.
What about the rental market at the moment? Is it worse than it looks?
Yeah, look, it probably is worse than it looks. I mean, we've been tracking advertised rental rates online, and we can certainly see Canberra is doing fine. Their rents for houses are up 22%. If we have a look at Perth, we're also seeing some very decent rental growth, so around 8% over the past 6 weeks. So this is over the COVID period, the COVID lockdown period. Elsewhere, though, we are seeing either stable rental rates or even declining rental rates, but it probably doesn't quite show the full extent of what's happening, because on one hand we can see what's happening with advertised rates, but in reality there would be a lot of negotiating going on behind the scenes, which is making quite a difference to the rental rates that landlords are actually receiving. Does it look like a real oversupply because of the circumstances, because of the conditions of units in our major capital cities? Yeah, the issues are primarily with regards to areas we saw very, very high levels of apartment development. So when we have a look at the levels of demand across Australia, we are seeing markets like Adelaide houses continue to do quite well. So the Adelaide rental market was doing really, really well prior to the downturn, and it still seems to be holding up relatively well. If we go to southwest Sydney, if we go to western Sydney, we can see that there's very, very low levels of activity. So this is consistent with what we've seen for quite some time. I guess COVID, though, has really compounded it. And one of the problems with the areas is that renters do have a lot more say in what they will pay in terms of rental rates, and also that the stock or the apartments that are being offered there are all very similar. So, well, not all very similar, but there are high levels of similarity compared to suburbs where we don't see high levels of rental stock. So it does make swapping between apartments a lot easier than trying to find two-family homes that are comparable in a different suburb. Certainly been a change in new developments, hasn't there? Yeah, look, it's a challenging area. I mean, if you have a look at the apartment market, we can see that the pullback of foreign buyers has been impacting that market for quite some time. Again, investor activity, local investor activity, we just haven't seen the same levels of activity for quite some time. When we have a look at search on realestate.com.au for new developments, we can see that we are seeing very high levels of search, but inquiry levels are down. So people are interested, but they're certainly not going to that next stage of inquiring to the same extent as they were, say, 2-3 months ago. In terms of search, though, people are still dreaming of beautiful apartments. The apartments that people are looking at are typically very expensive apartments in premium locations. But when we get to inquiry, it really is house and land that's seeing the activity. So again, really showing up that contrast between low levels of investor activity and still quite high levels of first home buyer activity, which it does continue to do very well. Now, we've seen enough water go under the bridge in this pandemic to give Australians confidence in the way that we are going, in contrast to other parts of the world. How do you think this will play out over the next 12 months for the property market? Look, it's been interesting. If we have a look at what happened to pricing in April, we've now got data, and really what has happened over April is that there has been very little shift in prices. So it is surprising. It's quite different to how I expect it to play out. I mean, certainly mid-March, I was expecting far bigger drops in pricing and quite very high levels of distress occurring in the property market. There's been a lot that's helped it. I mean, if you have a look at the levels of stimulus that have been put in place, if you have a look at the 6-month mortgage payment freezes, they are preventing very high levels of distress and lots of properties flooding onto the market. So on one hand, we can see that buyer activity is very active. If we're 35% up on buyer search activity compared to the same time last year. So we actually have more activity on site than we were seeing in April, May last year. At the same time, we have seen a decline in listing volume. So we do have quite a significant imbalance between the number of people who are certainly looking to buy and inquiring on buying and the number of properties that are available.
There were some doomsdayers saying that the market could drop by 20%. That really does not look logical at this point.
No, look, it doesn't look logical. I mean, it never really did. I mean, to see that level of decline, you have to get to some very catastrophic conditions. I mean, we do have catastrophic conditions in the employment market if you have a look at, what the unemployment rate could do. But we don't have a financial crisis and we haven't got a crashing banking system. So they're key. And then longer term, population growth will also play a role. So there will potentially be issues if we don't maintain our higher levels of migration. I mean, that could have impacts on new development. It could also have impacts on pricing. But at this stage, it does look like the strong banking system, the fact that we have had enormous levels of stimulus have certainly underpinned property demand and do seem to be leading to far more stable conditions than they otherwise would if we didn't have those factors in play.
Thanks, Nerida, and some music to the ears of potential buyers in New South Wales anyway, with the idea of dropping stamp duty. So that, I think, will allow a lot of people who haven't been able to get into the market to possibly jump in. I really appreciate having a chat today. We'll talk next weekend.
Speak then.